Hello all, this is Super Cliff's Notes if you really want to pass the general lines life insurance test. We're going to be talking about this time really shortly about nature of insurance. Let's start with the most important thing related to apparel. Like the most important thing is like that you have when something happens, we have apparel, which is the immediate specific event which causes a loss, such as earthquake or tornado. So this is the most important thing. Then it comes the loss. The loss means an unintentional decrease in the value of an asset during the peril. So like you have a house, then the house has an earthquake, a tornado, and this causes a loss because this loss is an unintentional decrease of the value of the asset. Then you have the second part of it. You have the risk to have this peril, which is the potential for loss, which can be high or low depending on the situation, and it can be added with some hazards, which is a situation or condition that creates and increases the chance of loss. So first of all, a peril, then you have the loss, and then you need to understand if that loss was potentially increased because of a hazard or it already had a specific risk. Insurance only just works on pure risk, meaning like it's a risk that has potential for loss only. So you cannot have a situation that you can have a gain, which is what we call speculative risk. Risk needs to be due to chances, needs to be definitely measurable, it must be predictable, cannot be catastrophic, it must be randomly selected. So you have the law of large numbers, you have the large number of exposures that are combined into a group, then so it's easier for us to predict. So it's an increased degree of accuracy in predicting all those large groups. Adverse selection, you gotta be careful with these people because you gotta be work on the tendency or people with poor average poor the average risk to seek out insurance. So treatment risks, the most important thing about insurance, risk transfer. The goal is to transfer insurance to other people, to other companies. Buy insurance is the best way to do that. Then you have the principle of indemnity. This is interesting because it involves making an insured whole by restoring them to the same condition before a loss. It involves making an insured whole by restoring them to the same condition before a loss. Meaning you want to, if the person has a loss, you want to make sure that the person with the money that you provide, the person will come back to it. Economic base of insurance. Human life approach. You just determine the financial approach of a person based on computing the current value of person future earnings. So this is like you put a value on a person. Needs is all about the needs that the person has. So sometimes a person makes $1 million but like has expenses of like 300,000. So the human part is like how much you make. The needs is how much you're gonna spend of it. Legal concepts. Legal concepts of insurance contract. You have life insurance. A company agrees to pay a predetermined amount in exchange for premium. And in the situation of health insurance, you pay a percentage in exchange of a premium. Contracts. 4. No more. Consideration. So consideration is something of a value that is interest party gives to each other. In the case of insurance, the insured provides consideration of paying a premium, and the insured provides consideration of promise to pay for the insured's benefit. Legal purpose, the insurance contract must be legal, and we gotta have a situation, have insurable interest, meaning someone that has the interest that you stay alive, stay well, not like something that you want to the other person to die or something to happen to it. Offer and acceptance. Offer is made when the applicant submits the application and the initial premium. Offer is accepted by the insurer after it was being approved by the insurer. Competent parties, you gotta be in your legal mind. Special features: contra adhesion, take it or leave it, period. Aleatory contract, you pay a certain amount, it's not the same amount that might be paid. You pay 50, you can die in 1 month, you can just get the rest. So this is aleatory. Unilateral, only the insurer is legally bound. You're not. You can take it. If you don't wanna pay, that's fine. And if you an insurer has the right to cancel the contract. Personal contract is a contract that is only for you. You need to just, if you wanna go in a different direction, you got to have an approval to change. Conditional contract, contracts are gonna be followed only if conditions are followed. Value and indemnity. Life insurance is value because it pays for the estate amount. You just have signed a $1 million insurance, you get the amount. Indemnity contracts, you get only the cost for the loss. The principle of the indemnity is to restore the insured to the same financial condition as that it existed prior to the profit. You cannot profit from indemnity contracts. We have warranties. Warranties is something that you guarantee to be true. Representation is like it's believed to be true. Concealment is like withholding of information. If you do that, you can cancel your contract. Insurable interest, what I was saying, requires an individual to have valid concern for the continuation of life or well-being of the person insured. You cannot just gamble on a person just to die or something to happen with it. Then we have like the stranger originated life insurance, which is like people that gamble on people to die or something to happen. Agent authority, you have 3 types of authority: express, implied, and apparent. Other legal concepts. Fiduciary responsibility is because you handle, fiduciary is someone with position of trust or confidence. So you make sure that you handle something for the person, is fiduciary responsibility. Waiver is a voluntary giving up on a right. Fraud is a misrepresentation, concealment of information. Estoppel is the process of preventing one party from reclaiming a right. And parole evidence rule, like rule that prevents parties in a contract from changing the meaning of written contract. This is a called parole evidence rule. What is in the contract is in the contract. You cannot change. Subrogation, you can go after someone if you have a loss, you can go to a third party in order to get some part of the loss. Void and voidable contracts. Voidable contracts. Void contract is an agreement that doesn't have legal effects. Voidable contract is a valid binding contract which can be voided at a request of a party which the right to reject. Have you enjoyed our content? Insurance Nation is a website that a location that I created in order to find some content, in order to help you to pass the insurance, general lines insurance test. If you have enjoyed our content, please join us on YouTube. We'll always be able to just add more content down there. We'll be able to just provide some real examples, go to websites, and at the same time we want to hear from you. If you want to have any questions or something that you have some questions about the test or something that you'd like for me to place it on this website, please let me know. I will be glad to help you out. Go to Insurance Nation at ideanaso.com and feel free to provide any kind of donation of any size. Thank you, and see you next time.